G'day guys, it's Ben here from Pumped On Property. Here today with Ali, my business partner. In today's video, we're going to talk about the information you need to collect before you actually go out and place an offer. So we're not talking about the generic stuff like which solicitor you're going to use or the fact that you've got a home loan sorted out. We're talking about the really nitty-gritty stuff about the property that you can only get from the agent that is going to give you an advantage when you actually place an offer and for your negotiations. So Ali's going to run you through this because she's the one that buys most of the property in our business these days. Let's go for it.
Cool, thanks Ben. As you said, we're going to get into the nitty-gritty. So this is very much more property specific, not so much the bigger picture. So one of the key things that you want to know before you go into any negotiations and start placing an offer is start looking at it from the other side. So the vendor's side. What is it that they want out of their offer and the negotiation? We've said it before. It's a win-win situation for buyers and sellers when we sort of are able to pick the property up and achieve a successful negotiation. So you've really got to be able to look at it from a different perspective. So one of the key questions to ask is how much they actually paid for it. So that's going to determine their motivation and their situation. So for example, if you inherited a property and you were selling it, you don't really care what you get for it. You want top dollar, but you don't really care. You just want it gone as quickly as possible and the money in your bank account. If you have lived in a home...
Brutal.
Sorry.
Is that what you're going to do to your mum's home?
This is not personal, this is investing.
Just stirring. Ali actually has way more empathy than me. That sounded like something that would have come out of my mouth.
It does actually, doesn't it?
Get rid of that property, get the money in the bank.
You're rubbing off on me, Ben. No, but in all seriousness, you do need to look at it from a different perspective. So you want to know where they've come from. If they've maybe lived in it for 50 years, like, you know, you or I in our home, we love our homes so much. If we were to ever sell them, we're very emotionally invested. So I'm not just going to give it away, and you're going to be a little bit more tough on who is buying your property. So, and then another one is how much they've spent on it. So maybe they picked it up 12 months ago and spent $200,000 on it, and they overpaid 12 months ago. Well, likelihood is they're not gonna be selling for market value. So you've really got to understand how much they paid for it, how much they've spent on it to work out where your negotiations will likely end up.
It's such a good point because there's really two different types of sellers that we're talking about here. One is the person that bought the property a long time ago, may or may not have spent money on it, and you know, let's say that they bought it for 200k, it's now worth $1 million. They spent 100 grand on renos over the last 20 years, but you know, whether they sell it for $1 million or whether they sell it for 950, they're still making a huge chunk of change there moving the property on. Then there's the other property or other type of person, other type of seller, which is the one that overpaid for it at the wrong time, that is overcapitalized on it and now is being forced to sell for some reason, or has decided that something's changed in their lifestyle and moving it on. And they're going to be far more rigid and far less flexible in terms of negotiating around price than the person that, you know, is making a good 500-700k without worrying about it anyway. So you just want to know who you're negotiating with, because, you know, for this person over here who's got the $1 million property that only, you know, owes nothing on it and that paid 300 grand with the renovation for it, you can start with a lower offer without completely upsetting them and rocking the boat.
Exactly.
Where this person over here who's rigid, who is just breaking even to selling it or even losing money, is going to be much more inflexible. So you may be coming in 50 grand below what it's worth. Just to start a conversation could really piss them off to the point where, you know, that puts a line in the sand and they won't even continue to talk with you, even though that was just a strategy by you to lower their expectations around price, knowing that you were going to pay quite a bit more for it than that.
Definitely, yeah. So determining that monetary situation for them is very important. Next is, why are they selling? So it's a slightly different question because, again, you know, they might be being forced to sell by the bank. They might actually have to move closer to family because of an illness, or they might be relocating due to work, but they actually do love their property. Or they might just be investors, they're retiring, they're done with it. So understanding their motivation is going to help you know what terms to put down with your offer. So they might need a longer settlement or a shorter settlement, and again, you can use that in your negotiations. So if, for example, property I was negotiating a couple of weeks ago, the sellers were relocating due to illness, and they they needed a flexible situation. So we actually offered them either the opportunity to rent back the property or a longer settlement, and that's how we won the property in a multiple offer situation. So it's understanding those key different points and what's important to the sellers that's going to help you get the best price, the best terms, and in some situations actually just secure the property.
Now, for those of you who are full-blown property geeks like us, there's one really good book. I feel like I'm doing a Pilates workout right now. Like, we're on these swivel chairs, guys, and
trying very hard to stay still.
Neither of our feet actually touch the ground. I feel like my core's been activated for the last hour, like bacon in the sunny coast sun. I'm just loving it. Working out and getting to do our passion. You know, but one book that I think every investor should read at some point in their life is Secrets of Power Negotiations by Roger Dawson. I actually read another book over the weekend which was titled Shoe Dog, and it was written by the founder of
Sounds like my kind of book.
Shoe Dog.
I like shoes.
I really like shoes. I like shoes too. In a not weird way.
In a weird way.
I like shoes. But this book, Shoe Dog's like the story of Nike, the founder, and you know how he went from absolutely nothing to you know, $10 billion net worth and a business that turns over 30 billion bucks a year. Like, just an insane story, and so real, like so modest, such a cool guy. Like, you know, I'm never gonna get to meet him, but I wish I could. And he had this one line in the book, because obviously Nike's whole world is negotiating contracts. You just don't think about how, you know, much of an impact distributing the amount of product that they have from so many different countries around the world is just about negotiations. And the biggest negotiation he ever won was in the 1970s. He went into China. He was the first American company into China, which, you know, Nike in China, it's the second largest market to them after the US now, so it was obviously the best negotiation he ever made as well. But what he said with any negotiation is you need to know exactly where you stand and what your worst case scenario is in terms of what you're doing. And the advantage that you have by understanding that as an investor is if you understand what you're prepared to pay for the property before you even start, then you starting below that and, you know, paying that is completely fine. But most people selling the properties don't actually have a line in the sand point. They're just being told to get as much as the market will let them get, and the market will set your expectations by the agent, and that puts them at a disadvantage from a long-term negotiation perspective. So that was a really weird way of saying those two books can be super helpful for investors. And I think, you know, the more you know about this sort of stuff going into it, the more of a buying advantage you have to get that property at the right price, or in some markets when, you know, there's no buyers, even below market value.
Exactly, yeah. I think what's really interesting is when you're on the selling side, you're hoping to get offers in. You're sitting there, fingers crossed, hoping that people are going to come in and want to buy your product or your property. When you're on the buying side, you have the choice to place an offer or to not place an offer on that property, and it's definitely a key difference. And again, important to know where they're coming from on the other side so that you can use that to your best advantage. But another key question that is a good one to ask the agent before you look at placing an offer is how long the property's actually been on the market. Now, this is going to depend in different markets and how sort of active and quickly things are selling, but if something's been sitting there for a long term, use that. A long time, sorry. Use it.
Long-term.
That's your sort of, you know, if you're a magician, that's what you've got up your sleeve. You know, you use every bit of information that you can. But some markets, you know, quality properties are selling really quickly, and you need to be active and, you know, ready to go and as informed as possible. But either way, whatever the answer is, you know what kind of competitive situation you're in, and you can use that to your advantage.
I think that's such a good question. Like, how long has it been on the market tells me almost everything that I need to know. Like, there's a few questions here that are super powerful. As Ali said, if properties are selling in 30 days or the auction clearance rate's 80 or 90%, then, you know, something's going to come onto the market. You're not going to have this luxury of time, and you shouldn't, by the time you're looking to buy, even be thinking about that stuff. You should be so knowledgeable about the product you're buying, the suburb you're buying, and what you want, that when the right one comes up, even in a hot market, you know. The flip side of that is most agents completely stuff up taking a product to market and marketing it, and they do their client a disservice by completely overestimating their expectations price-wise, and then it sits on the market for way too long, and that's when people like you guys and us swoop in and get things at prices that we should never have been able to get it for, just because the agents, you know, cost that client that money.
Exactly, yep. Information is power. You've got to know what you're working with and what you're working against. So another one, it's actually a question that I'm going to break into two parts. So first thing that you want to know in terms of trying to work out price is what interest there's been in the property. So this question is going to generate a very different answer to have there been any offers. They're very different questions and will direct the agent to give you very different answers. So when we're asking about what interest there's been in the property, we're looking to really find out how much his phone's been ringing. You know, how many inquiries he's had, how many people have actually come to the open homes. There may or may not be a little bit of inflation in the information that you are provided.
Without a doubt there's going to be inflation. Agents love to tell you how much interest there's been on a property. Take it with a grain of salt, because the next question Ali's going to talk about.
Still ask it though. It's definitely important, because they might say to you, there's been 30 groups through the open home. Maybe there was 20, 25. That's still quite a lot of people to come through. Yeah. But, you know, he might also say, you know, we had 3 people through the open, but, you know, somebody's talking about placing an offer. I love it when people are talking about placing an offer. Doesn't mean anything. I like it when people have actually placed an offer. That's the real, you know, people are putting money where their mouth is. That's something that really makes a difference, and that's what educates you to know what you're actually competing against. So in terms of written offers, that's what really means something. But the reason why you want to know about the interest is because then you can determine how quality that interest actually is. So if they've got 30 people through and they've had no offers, well, we know that they've just decided to throw a party and invite everybody in the street. Whereas if they've had 30 groups through and they've got 6 offers, you know that you're in a really competitive situation, and you need to be, you know which game plan you need to go in with. You know, if they've only had 2 or 3 people through an open and they have actually received 2 offers, then that's a pretty good ratio. So really important to ask those 2 questions separately, and again, listen and interpret the information that they're giving you.
That's such a good point. And I think, you know, what I like to do before going into any sort of property is really understand the marketplace, really understand my personal strategy, really understand the suburb, but I like to understand the person that I'm buying from as much as possible. And I also like to understand the agent as much as possible. Are they a top performer? What have they been selling recently? Where have they been selling it recently? How well are they doing financially, I suppose, and how important is this sale to them? Does their word mean something? Like there's, you know, the simple truth about most suburbs is that 3 agents, maybe even 2 of them, will sell 80% of the stock. This is Australia-wide consistent, and you know, those 2 agents generally get to that place because they are honest, they're respectful, they're upfront, and they don't bullshit around with you.
Yeah.
But when you find these other agents that aren't performing well, or that are saying whatever they need to do because they think snake oil is the way to actually do this business these days, you know, they're the people that you're really looking out for, and they're the ones that we love buying off, because those snake oil guys come unstuck when you are starting the right questions and you have a strategy of how you're going to actually get the best price for yourself and for the people that we work with. So
exactly right. Knowing who you're buying from, definitely.
Is there anything else you wanted to add to this list, or is that kind of wrap up today's vid?
I think that kind of wraps it up a bit, but yeah, definitely that last point that you made, completely understanding who you are buying from and negotiating with. And sometimes I love negotiating with the top performers in the area, because you know that the word that they're giving you and usually what they're saying is actually true. A lot of people see it the other way, but more often than not, the top performers in the area, they don't need to bullshit you, so they just don't. You know, they'll just tell you how it is, and sometimes that's the best position you can be in when negotiating, because you actually know where you stand. That's so important.
Knowing where you stand is so good. Then you can make a line in the sand point and go, I'm prepared to pay that for the property because it represents value, or that's above what I'm prepared to pay, and then you move on and don't waste your time or theirs. So
exactly.
To find these top performers, you can go to OpenAgent or ratemyagent.com. Just punch in the suburb and you can see who's made the most sales, who's sold the most expensive properties, and then you can click in and see exactly what they've done. So one of my favorite things is to, or what I used to do, was I used to ask agents when I got to the property as a bit of a trust test how many properties they'd sold in the last 12 months and how their business was going.
Cool.
Because I would jump online before I went and saw them, and I could clearly see in realestate.com, Domain, and those other channels that exactly what they've done. And some of my favourite top performers used to always go, man, business is good, mate, I've sold 80 properties this year, and then I'd look into their profile and it's like they've sold 20 properties. So I knew that at least nothing that came out of their mouth from that point on made any meaning for me, and I took everything with an 80% grain of salt. And I think it's important to understand that stuff, because, you know, if the guy that the top performer is like, I've made 40 sales and I'm kicking ass and I'm really enjoying it this year, and then it's truthful online, then, you know, you're starting to work with someone that you can work with without having to play all the tricks as well. So I hope you've enjoyed this video. For those of you seriously thinking about buying a property in the Queensland market in the next sort of 3, 6, 12 months, love to offer you a one-on-one strategy session. Please jump over to www.pumpedonproperty.com. Just hit free strategy session, which will either be with myself or my brother Simon, and we'll look at where you are right now, where you want to be in 12 months, and where you want to be longer term, and educate you as much as possible about the market up here. And go from there. So if you haven't already, please subscribe to the channel. Ali and I will keep producing what we think is as much open advice as we possibly can for you. And thanks so much for your time and attention today.
Thanks guys, see ya.